All right, so welcome to another video. Today, what we're going to do is we're going to go ahead and take a look at butterfly option spread idea on AMD. So we're going to go ahead and check that out. Definitely keep in mind, none of these are recommendations to buy, sell, or trade anything, just my opinion. If you want to grab any of that, check out the Discord channel. There's some charts that I post in there. You can also take a look at some of the freebies on our website at tradersfly.com, along with some other great courses and classes that we've done here over the last few years. All right, let's take a look at setting up a butterfly trade here on AMD. AMD is set up to report some earnings here soon. So we've got a handful of hours here. This is 5/3. So it's set to report after the bell. Usually you want to do these a couple hours before, maybe an hour, maybe 30 minutes even beforehand. What I'm going to do is do a butterfly spread. And what you could do is, evaluate the last earnings and say, hey, what did it do last time? Well, last couple of times, like this time right here, you can see we had a little bit of a pop on earnings and then a pullback. Another time in the past, if you want to get real technical with it, here we popped a bit. That was about 13-point pop. So, and then you have here a move again, quite significant of a move from 90 to about 98. So about $8 move here from the 90s. So right now they're expecting about a 7.7. Yeah, 7.7 is the last time I checked it. Move here on earnings. If you look at the option expected move, it's about 8 for the 3-day option. So it's a little more than that. So 8.7. So let's just call it, about 8 or 10 bucks to the move. Now to your guess on, hey, will it go higher, will it go lower? In dealing with our earnings trades, you're basically taking a guess. So take a guess, and that's it. When you're trading earnings, you pretty much have to be ready to be able to take a full max loss. What I'm going to do is take this butterfly spread. Because the last few were bullish, I could just do one bearish. I'm just going to still go bullish because it's just been selling off quite a bit. And I'm going to go a little against the trend because we've been going down and down. And now I'm thinking, hey, maybe it'll pop. Maybe it just won't pop as strong. And that would be my only thought. So if I was to do a trade construction, again, anytime you're doing an earnings trade, you have to be prepared for a full max loss. So here we go with 90. And now we'll go about 8 points, which would be a 98. But maybe I'll just go 7 points. You could do 7, 8 points because maybe it won't go as much. Because maybe the market's a little weak, maybe it'll sell back down, that kind of thing. So it's just overall, there's just some weakness in the marketplace. So maybe you'll just do, a little bit of a pop, not too bad. So I'm going to right click, go to butterfly spread. I'm going to right click, analyze the trade. And I already have some trades already going on in here. So there is some stuff already in here. This is kind of like a hedged off spread from the stuff I've already got going on. So I'm going to hide that position. We're going to go ahead, do just the butterfly spread right here. And I'm going to widen it up by, let's just go maybe three points or so. Okay, so there we go. So I've got a $31 spread. So it's not too bad at all. It's just like, look, I could take a $31 cheap shot where I'm willing to risk the full thing, on earnings, where this trade, the most I could lose is about $31, $32 right there. Okay. So if it goes down on me, I'll probably have the max loss, maybe 11, 12 bucks. If it goes up, you could make a bit, because what's going to happen is these options will decay very quickly. And you also have the implied volatility that's coming out of them. So you're looking at, let's just say about $25, $30 you might make on it, but you're risking only 30. So it's a 1-to-1. So you're trying to make, let's say 20 on a $30 investment. That's a pretty significant percent on a return. Now, if you wanted to go ahead and try and widen it, because the butterflies are expensive, you could do that. Just understand that will increase the capital risk, and now you're going to be putting on a $55 trade. It's not too bad with AMD. It's a cheaper stock, and you may want to do something like that because then you don't have to pay commissions, especially if you're trying to do something more along the lines of, let's say, a $300 trade. So let's say we're doing about a $300 trade right here. Okay. And now if this thing pops and the volatility will come out, let's say if we're looking at volatilities, how much would the volatility come out? Well, the way I'm going to check that is I'm going to close that up. Right now we're at 130% volatility, and we might get down to about 88, maybe 78. So call it 80. So I could come out about, let's say 40, 50 points of volatility. So that's quite a bit. So if I go to volatility here and just go minus 40, we might pop something like this. So on a $330 trade, I might get into about a 200. Maybe if it pops too high, you make 100. Maybe over here 130. So it's still quite a bit. You know, when you're looking at it. So volatility wise, there's a lot that's going to come out because it's a high implied volatility stock. We're just kind of looking for it to pop. If you are a little more directional, you could be a little more aggressive with it and bump it up one extra point or two. That will allow you to use a little bit less capital, but it'll also allow you to make a little bit more and give you some more range on the upside. The downside is that, well, you have less on the downside. So doing something like this could give you some more room there. I wouldn't do anything broken wing because now then you're using a lot more capital. That doing something like that's a little too offset for earnings trades. It's just not usually recommended. It's not common. Could you do it? Sure, but you are going to be using more capital. Anything broken wing is just more capital. So be a little more careful there. Other than that, this is kind of the trade you put on, and then you could put a good till cancel order to close it out and try and take your profits. Or you could take kind of one off at a time as you see it open up the next day. So that's just a matter of personal preference of what you like. I'm just going to go ahead and try and get this one filled with one contract first. I'm going to go ahead and do one, and we'll try and get like 53 cents. I'll send it in. These are, so pretty much a 0 day for me. And then if that doesn't work, let's try another one at 54 cents. And try and get more of these filled, because that's a pretty fast trade. So you try and, there we go, 54 cents works. So let's try and get the other ones at 54 cents and see if we can get them filled. There you go, those get filled. The one at 53 didn't. So let's try the 54, might have to go to 55. We'll see. There we go, got it filled. So now we'll keep an eye out on those butterflies. So those, I put it in my fast trades area over here. So I got kind of like a 5 contract lot spread there. And yeah, we got AMD. And sometimes when it's confusing because I got multiple positions here, I'll just go to my fast trades, kind of like right at the top right there. And now I've got just a butterfly spread there as a setup or construction, and now be able to see kind of like how this plays out. If you're following along by paper trading or real trading or whatever the case, that might be something you're doing. For me, I'm also doing some of this to update one of our classes. I've got one trade going in as an iron condor here on this other account that I set up. So it's a little bit of a different construction, but just to show you, you could trade earnings also as an iron condor if you like. And that's just something that'll be added in later on to one of our iron condor classes that we have going on. So anyway, I hope that helps, gives you some insight. What's the plan for this trade? Well, there's not a lot you can do with earnings. There's no adjustments really that's possible. You put it on and it's going to either work or it doesn't. If it doesn't work, you take it off for a loss, or if it goes way lower, you could let it expire. Otherwise, there's very little room. Sometimes stocks do gap down and then gap up. So if you're kind of at a max loss, you could leave it if you think it could run back up, because I've seen them do that. If they drop a little bit and then start running back up, they could do that. And in that case, it could be beneficial to leave it on. Otherwise, if it doesn't pop in your favor, yeah, you've got a little max loss. If it pops in your favor, then you take it off for some profit. You could take it off by scaling out, take one contract, then take off another, then take off another with time. And that's just scaling out of it slowly. But if you see it kind of there, a lot of the implied volatility coming out, then you could just take the whole thing off. The trade worked, and then it's done. So anyways, there's not a lot of complications to the plan. It's just about doing it and executing it. Other than that, that's all you can really do with it. There's no room for adjustments. It's just a 3-day trade. There's no time left in these trades and these options. It's different with these 24-day options. I've hedged those off a bit, so those are a little bit different. So what I've got here is this with a hedge, I believe somewhere in here, and those are hedged off a little bit different. But with the fast trades there, you have to be a little bit more, there's not much you can really do with the fast trades. So with this trade, because I've got more time, I've got a July spread in here. I hedged it off a little bit with some earnings and stuff. Yeah, I'm burning a little theta and stuff right now, but I'm like, I just don't know where this is gonna go, and it just helps protect my spread for now. And then after that, I'll open it back up and go from there. So anyway, hope that helps. Thank you so much for joining me. Enjoy the rest of the week ahead, and I will see you on the next episode. Don't forget to join the Discord channel if you're brand new, you want to see some charts there, or join a live class that we had, or one of the pre-recorded live classes we've had in the past on the website at tradersfly.com. Thanks again, and I'll see you next time.